Okay, so hopefully that was helpful to you to understand some of the Chapter 1 material. Again, just giving you really broad overview, starting to indoctrinate you into some of the terminology, understanding what we're doing, that we're going to be getting more into, obviously, as we go through, and get more detail into the course. Some key things that we need to understand. The assertions, big deal, right? Okay, we're auditing the financial statement assertions, and how we audit those assertions is going to be a major theme as we go through. The reports, again, I think they jumped the gun a little bit in how they were describing some of that. We're going to get to that more in Chapter 18, but I think we are going to rely on some of that terminology a little bit. Unmodified/unqualified report. Unmodified, more the current term. Unmodified report means we think the financial statements look pretty good, right? We were happy, right? The auditor was smiling when we had those, okay? Unqualified. Qualified report means that the auditor has found a material misstatement that they want to call out to the users of the financial statements' attention. But they are going to use the phrase except for, meaning that except for this thing or things that I'm calling out to you, I still think you can rely on these financial statements. Adverse opinion, all bad. I don't like these financial statements. Don't rely on them. Warning, warning. Step away from the financial statements is essentially what we're saying at that point. You can't rely on these, right? And so some important terms that we saw there. We got into some of the steps of the audit. Dealing with client acceptance, being concerned that we have some concern about management integrity, that we're knowing that coming in at the beginning, right? So we avoid a client that lacks integrity. Very important as well. So really getting some key terms under our belt. As we get into Chapter 2, we're going to start to understand more about those financial statement assertions, but we're also going to be introduced to some of the standard setters, the AICPA, Auditing Standards Board, the Public Company Accounting Oversight Board, and understand a little bit about some of the things that they do coming up in Chapter 2. Homework, you'll see the homework, but I wanted to look at the quiz a little bit with you. You can print these out, by the way, from Connect, okay, McGraw-Hill Connect. Page 20 in your text, in terms of steps in the audit. I told you to take a look at that. And question 6, before accepting an engagement to audit a new entity, an auditor is required to make inquiries of the predecessor, right? We talked about that. That is a major step that we need to be concerned about. Looking at some of the other questions that seemed maybe like we want to talk about these a little bit. An auditor who accepts an audit engagement and does not possess expertise with respect to the business entity should, and the answer is, obtain knowledge of matters that relate to the nature of the entity's business. I think that's something that we need to get used to. You don't have to have the understanding of the business to accept that client. You have to have the ability to acquire that knowledge. Okay, so that's sort of a little bit of a subtle point there that would help you answer that question. And again, remember I said the standard setters are not amused. The ethics standards are not amused if you get a client and you get it, even if it's by accident, you think, oh, oops, no, this is a little tougher audit than I thought it was going to be. I need to back off of this. That is not acceptable. That's a violation of the ethics. You need to take very seriously this idea if you're going to pick up that client or not. And even if you don't have the knowledge of that industry, it's okay, but you better be able to get it in time to successfully complete that audit. That was question 9. Question 10. An investor is reading the financial statements of the Stankley Corporation and observes that the statements are accompanied by an auditor's unqualified report. Again, unqualified, unmodified. I want you to start to think about that term, unmodified. From this, the investor may conclude that, and it's the first one that's the answer, any disputes over significant accounting issues have been settled to the auditor's satisfaction. So we have a happy auditor, right, if we have an unmodified, unqualified opinion. Okay? Those were the couple that I wanted to go over with you from the homework, okay? And again, I just printed these out from Connect, and you can do that. And I've set the parameters up so that you will be able to get the feedback. You can work those questions as much as you want. You can print them out. I've given you as much as I can on how to get these homework done. That was the quiz, and you'll see similar questions in your homework. Okay. Look, if you're having questions, concerns about getting the material, how we're setting things up, you need to reach out sooner than later. I'm more than happy to talk with you over the phone to get you started, to get you going in the right direction. Okay, guys? All right. Thanks for your patience, and study hard.